All right, welcome back. Sorry for not uploading last week. We ran into a good bit of business, so always a good issue to have.
Changing the housing market.
Yeah. So today we would like to talk about, again, just branching off what we did last time, which is first homebuyers programs, but today we're going to focus on the conventional programs, which we have two of, the Home Ready and the Home Possible programs. There's different caveats. As we mentioned in the first video, there's plenty of benefits in all of these programs, and it's really just tailoring it to the borrower and kind of where their credit scores are, where their income levels are. So we're just going to kind of talk about it today. So what are the major benefits to Home Ready and Home Possible when compared to other buyer programs such as FHA?
The main benefit of the Home Ready and Home Possible programs are really twofold. One is it requires a 3% down payment rather than a 3.5% down payment. That's not a lot, but it does and can make a difference. And the other main difference is in the PMI structure. FHA has two aspects to their PMI structure. One is an upfront premium. It's 1.75% of the loan balance. So for instance, on a $200,000 loan, you would have a $3,500 upfront mortgage premium that is financed into the FHA loan. And then you have a monthly PMI premium with FHA. The conventional programs do not have any upfront funding fee, any upfront PMI fee. They only have the monthly PMI fee. So the big advantage can be a lower loan amount. The PMI structure could be better. The PMI premium could be less than FHA, but that depends on the borrower's credit scores. In some instances, if their scores are low, it could make their conventional PMI higher. And so again, there may be more reason to go towards FHA. What we always do for our clients is put both loans side by side with all the rates, the PMI premiums, the upfront premiums, and we just look at it and say what is best. And then the only final consideration for a borrower, once they've looked at the two programs, if by some magic they both had the same payment, identically side by side, which one would you rather do? Well, the conventional first-time homebuyer programs let you do a little bit lower down payment. That's good. But the big benefit is that the PMI, the monthly PMI premium on the conventional programs can be dropped once you have 20% equity in the property. Well, people say, well, gee, I've got a 97% loan. How long is it going to take me until I could drop the PMI? And because you can use both your pay down, which is fairly slow in the beginning of a 30-year loan, but you can also use the increasing value of the home as time goes along. What we find in practice is that the PMI generally can be dropped on a conventional 97% loan within about 5 to 5.5 years. And FHA does not allow the PMI to ever be dropped.
So a lot of what we do with our clients here is just really, we have to figure out where we're meeting them. We have clients that have 800 credit scores. We have people in the 500s that come to us. And what we do is just try to tailor the best program for that person. So if they're wanting to be in the house for 10, 15, 20 years, or for the whole lifetime of the loan, we often want to go with these conventional programs if possible, just because
they're going to be better over the long haul.
They will be. So there's a lot of consideration when examining these first homebuyer programs where, if looking at the numbers isn't enough, you could say, well, I'm really only going to be in this house for about 3 years. Well, FHA might be better for a lower down payment. It's all just dependent on where we are in that process, where we're meeting you.
So one thing I will mention about the first-time homebuyer programs that also can be an advantage, but maybe a lot of times you may want to know, well, in general, which program do you think will work best for me? My kind of general answer is this. If your credit score is under 680, generally speaking, FHA is going to result in a lower payment because the FHA PMI premium is set the same for every credit score. It does not vary with credit score. So we find if your score is under 680, FHA is probably going to give you the lowest monthly payment. And you still have to consider, well, how long am I going to be in this house? Because the conventional will let me drop the monthly PMI premium. And again, we can help with those decisions and help just put the numbers on the table and let the borrower choose what works best for their situation.
So, as we have already said, we've talked about some credit score requirements, and for these programs, specifically Home Ready and Home Possible, they go as low as 620. But as we mentioned, the PMI does differ on these conventional loans, whereas FHA they don't. So there's always pros and cons to these types of things, and that's why we meet clients where they're at, and we run the numbers, we run the scenarios, and we allow them to make the decision, and we inform them with what we believe is going to be best. And there's just a conversation to be had there.
And I think it's important to know that whereas a broker represents the buyer, the borrower, if you go to a direct lender, a bank or direct lender, they represent their own interests. And there can be reasons for steering you to one program or the other based on how much money you can make as a lender on this program versus this program. Our fees are the same regardless of which program you choose, and so we don't have a bias in which we're going to kind of lead you towards one program or the other just because we can make more money on it. Our fees are fixed for you whether we do the FHA or the conventional. Our fees are disclosed to you. You know exactly how much we make. They are no different than the bank's fees, and you'll see that. But we don't change our fees according to the type of program we're putting you on. It's the same. And that way, when you ask us a question, is this good or is this bad, we can give you an honest and an unbiased answer.
Yeah, so another kind of aspect that we mentioned was down payment, and we had talked about gifts with FHA, and that is a common thing. Parents like to help out their children sometimes, or family members. You can also do that with these programs. Gifts are an eligible form of down payment, so up to that 3%, as we were talking about, that can be received as a gift. Now we have to document that gift, and there's all types of verifications that come with that, but it is a possibility. So if you're in the position of buying your first house, if you're fresh out of college or just been working a few years, just know that when you're examining these first homebuyer programs, that is often just a key detail, as people can help you where it is allowed, which in this case it would be allowed for down payment.
And there's another aspect to the conventional programs that is actually very different from FHA, and that is the conventional first-time homebuyer programs are the only programs that will allow you to validate cash savings. That's money you've put in the cookie jar, and use those funds as part of your down payment. That's normally not allowed in any other transaction because cash can't be traced. But because these programs are to incentivize young borrowers to buy their first homes, it allows for the use of cash as down payment. We have to put the cash into a bank account, but we have to have a narrative of how you saved the cash over time, whether that was received as a Christmas gift or whether you took it out of your paycheck. You just write a narrative explaining where it came from, and then we put it in the bank, and you can actually use cash as your down payment. That's very different from FHA.
And one of the key differences, this is a conventional loan program, so some people will ask themselves, well, why not just give the 2% more in down payment and just get a typical conventional loan? Well, there is a benefit in the mortgage insurance coverage, because on a 95% loan or a typical goodness, I'm going to have to restart that.
That's okay.
Conventional. I'm just going to restart that
Yeah.
whole thing. So start again from here. Some people will kind of ask us, well, why not just give that 2% more to get a normal conventional loan if I have good credit, if I'm making good money? Why do I have to worry about that? And one of the kind of benefits to these first homebuyer programs is when it comes to mortgage insurance, as we've talked, but when comparing Home Ready and Home Possible, which are conventional programs, versus just a typical 95% loan, which would be a conventional loan, the mortgage insurance coverage percents change. So on a 95%, you have to have a mortgage insurance coverage of 35%, whereas for a first home buyers program such as Home Ready and Home Possible, that is only 25%.
And that's a simple way of saying that even though your PMI premium should be higher when you're only putting 3% down, the first time homebuyer PMI is actually subsidized and lowered. And there is a big advantage to using the Home Ready program, even if you don't technically need Home Ready, because of the basically subsidized PMI. And the last item
So start at where you were saying subsidized.
I gotta remember what I was going to say.
Okay. Start again from here.
The only reason you may not be able to use a first-time homebuyer program if you are a first-time homebuyer is that for the conventional programs there is an income limitation. If you make above that income, you can't use the programs. The threshold is actually very high, and it's kind of rare that a first-time homebuyer who is in their 20s to 30s, that their income is going to exceed that level. But we have those income figures for every zip code in the country, and if you know the general area you're buying in, we can tell you what the income level is, at what point you cannot use it. FHA does not have any income limitations at all, but the conventional programs do, but they're pretty generous.
So there are other caveats. With certain loan programs, education is a requirement. And these two programs, Home Ready and Home Possible, do require you to just have a general education course. They're online. You can schedule appointments to either do it virtually or in person, wherever you may be, whether you're out of state, in state. They have it all across the U.S. So that is just something to keep in mind. You have to pay for it. So again, that's just factored into all of the numbers that we run. And we'd be able to give you just some recommendations to the educators that are around the Greenville area in Spartanburg. And we just have, several names from people that we have sent our clients to in the past. But that's just another thing. All it is it informs you about buying your first house. It's kind of what we do, but the reason that it's in place is to have a third party kind of verify what we were saying, to make sure that we aren't pushing you in some type of way or misinforming you. So it's kind of a double check on us. We kind of talked about how banks will push you to certain programs because of the benefit. And with these programs, that just kind of is a safeguard for you as the borrower to make sure that somebody that doesn't have any skin in the game is giving you correct information.
And the whole counseling process is maybe, from what our clients have described, an hour at the most. It's not a 3-week university course that you have to
I
go
don't
to.
think anybody would use
It's a phone call and a counsel,
So today was just kind of a quick, summary of the two programs that we talked about. If this is the first video you watch, we did a video a couple weeks ago kind of going more in depth of the general scope of first home buyers programs, but this was just more in detail for the Home Ready and the Home Possible program. So do you have anything to close out with?
No, as always, I just encourage you to reach out and have a conversation with us, because we can give you quick advice, and we can give you quick ideas about whether these programs are right for you, whether they would come into play. We can take a scenario right now and tell you how much house you could buy and what the different programs would look like if you bought that particular house. So please, at any time, pick up the phone and call us or shoot us an email and we'll respond.
And again, a big portion of our business is we would like to meet you wherever you are, whether you are ready to put in offers on the house, or if you're just seeing what you need to do with credit. If you have zero credit, we do have programs for that, but if you're wanting to move forward in a year or two, we can even start with you then and just kind of give you some helpful pointers to that. So we really do encourage, no matter where you are in the process, we would like to meet you wherever you're at and help you out in any way we can. As always, our phone number is 864-235-9596. Both of our emails will be in the description, and we encourage that you leave questions in the comments. Thank you.
All right.